Last day I was scrolling on Instagram and I found this very interesting post. It shows two cashers, one who is offering stocks at low prices to sell them later at higher prices, and the other one who is offering stocks at high prices to sell them at low prices. We all know that the right thing to do is buying stocks when they are low and selling them when they are high. But in this picture, a line is forming to buy stocks high to sell them low. We all recognize this is totally absurd, but this is exactly what happens on the markets all the time. It happens since decades, centuries. Humans always make this stupid mistake. They buy high and they sell low. When the market is going up every day, when the trend is very strong, everyone wants to buy. Everyone is FOMOing in the market. Everyone feels the need to buy to avoid being left behind. Everyone is afraid that the stocks he likes are going to keep rising and he's not going to be able to buy them. So everyone rushes into buying stocks all the time, regardless of price. A lot of people is putting valuations aside. Or even worse, a lot of people is getting too optimistic and is doing all kinds of wrong valuations, too optimistic valuations. Instead, the opposite happens when the market is weak, when the trend is going lower. When the market is going down, everyone is afraid, everyone is running away from stocks. There is even people who sell stocks on a loss and never comes back again on the stock market. Someone thinks the stock market is just a casino. Someone thinks it's a fraud and never comes back. But that's not the case. The market is not a fraud. Someone blames hedge funds and banks, saying that they are reaping retail investors of their savings. But that's not the case. We have to take responsibility of our actions. And we need to remember that hedge funds and banks are those who are getting most hit when the market trends lower. For example, Tiger Global, one of the best hedge funds in history, is getting completely smashed in 2022. The fund should be down around 50% this year. Everyone gets hit in a bear market. Big investors, retail investors, just everyone. The market is not a fraud. When we invest, we always need to think long term. It's impossible to predict the stock market direction on the short term, but on the long term, we all know the stock market tends to go up, and if it wasn't so, it would mean that there is some problem in the economy, so probably investments would be our last problem. So don't let the herd mentality trick you. Don't follow the herd. If you want to be a very good, a very successful investor, you need to be a contrarian, you need to think with your own head. Most of the time, the best thing to do is doing exactly the opposite of what the herd is doing. As Warren Buffett always says, the best time to buy is when the market is down. When the market is falling, we can find some really great opportunities, because maybe one stock which you liked 1 month ago at 50 per share, right now is at 25 per share. So you have a great opportunity to buy that stock at a lower price. If you liked it at 50, why you shouldn't like it at 25 if the fundamentals did not change? This is a very important mindset you need to have if you want to be a successful investor. Falling markets are just a great opportunity. I know that behaving this way is totally against human nature, because normally humans tend to run away when things get too hard. And checking your account balance every day and seeing red, always seeing that you're losing money is very painful. So a lot of people run away from that pain and sell its stocks at the worst time possible. When the market is falling, stocks should be bought, not sold. We have to stand the short-term pain to get long-term success. This is very important if you want to be a value investor. That's it for this video. Please remember to subscribe to my YouTube channel if you're new, and remember to leave a like. And you can also leave a comment if you like. See you next time and have a nice day. Bye!